In a world where technology and geopolitics collide, major shifts are redefining our global landscape. From AI-driven market volatility to significant space consolidation deals, the past 24 hours have seen impactful news. Here are today's top 10 stories you need to know. As tensions in various regions of the world persist, geopolitical developments remain a central theme in global news. Recent reports highlight ongoing conflicts and diplomatic challenges that could significantly impact international relations and economic stability. The interplay between nations is becoming increasingly complex as countries navigate their interests amid rising tensions. While specific earnings impacts have not been reported, the uncertainty in the geopolitical landscape creates a challenging environment for investors and businesses alike. Analysts suggest that as these tensions evolve, they could lead to volatility in the markets and influence investment strategies. Stakeholders will be closely monitoring these developments as they have the potential to reshape the future of international relations and economic cooperation among nations. Dutch digital operator Prosus has reported an impressive 84% surge in full-year adjusted core profit, signaling strong growth driven by the increasing influence of AI technologies in its operations. This remarkable performance suggests that Prosus has successfully capitalized on the digital services revolution. While no direct earnings impacts from the Federal Reserve's policy were reported, the surge in profits demonstrates resilience amid rising interest rates. Analysts note that although high rates may pressure valuations, the profit increase reflects the underlying strength of Prosus's business model. The market response to this announcement has been overwhelmingly positive, with many investors viewing it as a sign of robust growth potential in the digital sector. As the company navigates the complexities of the current economic environment, investors will be keenly watching for further developments and whether this momentum can be sustained in the coming quarters. Oil prices experienced an uptick as reports emerged that the U.S. and Iran have tentatively agreed to halt attacks, although skepticism lingers regarding the sustainability of this peace deal. The increase in oil prices could bolster margins for oil companies, which is significant given the current economic climate. While earnings from oil companies have not been reported today, high oil prices contribute to inflationary pressures, which have recently crossed the 4% mark. This has prompted the Federal Reserve to adopt a more hawkish stance on monetary policy. Technical analysis indicates that oil prices have broken through key resistance levels, suggesting potential for further gains if the peace deal holds. Investors are cautiously optimistic, but the long-term outlook remains neutral as geopolitical tensions continue to create uncertainty in the market. The oil sector remains a critical component of the global economy, and ongoing developments will be closely monitored. In a significant move within the energy infrastructure sector, Marietta has announced a merger with Lhoist North America in a cash and stock deal valued at $13.5 billion. This merger signals a trend of consolidation in energy-related industries, particularly as firms seek to enhance their market positions amid rising costs and increasing competition. The combined entity aims to leverage Lhoist's expertise in lime and minerals with Marietta's extensive network in construction materials, creating a powerhouse in the sector. Although no earnings have been reported yet, the deal reflects the ongoing demand for energy infrastructure services, especially as the industry faces evolving regulatory challenges. As interest rates remain high, smaller firms may face pressure, but larger deals like this are often capital efficient and can spur additional mergers and acquisitions. Technical analysis indicates that energy infrastructure stocks have seen substantial growth over the past year, with projections suggesting further increases. Analysts predict that this merger could lead to enhanced operational efficiencies and strategic growth opportunities, setting the stage for a robust market response. SpaceX has successfully secured an $11 billion bond deal, part of a broader $25 billion financing strategy. However, this deal comes with a notable catch: a pivot towards hardware access for competitors. While no earnings have been reported in conjunction with this deal, it signals a significant shift in the company's approach to AI infrastructure. High borrowing costs could pose challenges to SpaceX's ambitious AI goals, yet the bond deal is viewed as a capital-efficient strategy to fund ongoing projects. Technical indicators show that bond yields are flashing warning signs, suggesting that investors are beginning to temper their enthusiasm for AI ventures. Despite short-term volatility, analysts remain cautiously optimistic about the long-term potential of SpaceX's initiatives if demand for AI infrastructure continues to grow. The space industry is on the cusp of transformation, and this bond deal may lay the groundwork for future advancements. Minneapolis Fed President Neil Kashkari has projected a potential interest rate hike in 2026, citing ongoing concerns related to U.S.-Iran relations and the rapid advancement of artificial intelligence technologies. This announcement comes amid a backdrop of economic uncertainty as inflation persists above 4%, prompting the Federal Reserve to reassess its monetary policy. While immediate earnings impacts were not reported, the likelihood of higher interest rates could create downward pressure on technology valuations, particularly in an already volatile market characterized by high investor anxiety. The tough rhetoric from Fed Chair Kevin Warsh has led to lower bond yields, creating a temporary sense of relief for investors. However, analysts caution that a rate hike could reverse this trend, potentially escalating borrowing costs and dampening economic growth. As bond yields exhibit warning signs, investors are urged to brace for a bearish environment for tech stocks in the near term. Market participants will need to adapt their strategies as these developments unfold, with a keen eye on inflation trends and geopolitical tensions influencing future decisions. Baidu's shares surged by 7% following reports that its AI chip division, Kunlun Shin, is aiming for a monumental $50 billion initial public offering in Hong Kong. This development has generated excitement among investors, as the AI chip unit is seen as a key growth driver for the company. Although Baidu has yet to report its Q2 earnings, the anticipated IPO could catalyze momentum in the AI chip sector. The current high interest rates in the U.S. may impact IPO valuations, but the Hong Kong market appears to be less sensitive to these fluctuations. Technical analysis indicates that Baidu has broken through the $90 resistance level, suggesting strong institutional interest. If successful, this IPO could significantly enhance Baidu's market position and stimulate further investment in AI technologies. Investors are eager to see how this plays out in the upcoming weeks, as it could set the tone for similar ventures in the tech industry. In a concerning development for the semiconductor industry, shares of Samsung and SK Hynix plunged following reports of staggering investment plans totaling $1.3 trillion. This announcement sent shockwaves through the market, as investors grappled with the implications of such capital-intensive initiatives. Both companies are at the forefront of semiconductor manufacturing, a sector critical to various technologies, including artificial intelligence and consumer electronics. While neither company reported earnings today, analysts suggest that this investment shock reflects the burgeoning demand for AI memory solutions, driven by rapid advancements in machine learning and data processing. However, rising interest rates may complicate these expansion efforts, as they could significantly increase borrowing costs and dampen future growth prospects. Technical analysis reveals that the sharp drop in share prices has broken through crucial support levels, raising concerns among investors and indicating potential volatility. If demand for AI memory remains robust, there may be a chance for an oversold bounce in the short term. As the semiconductor market evolves, stakeholders will closely monitor these developments, particularly the company's ability to adapt to changing economic conditions and technological demands. In an exciting turn of events, Rocket Lab has announced an $8 billion consolidation deal with Iridium, leading to a significant jump in stock prices. Rocket Lab's shares surged by 9%, while Iridium soared by 20%, as shareholders were promised $27 in cash and Rocket Lab shares. This strategic move reflects a broader trend of consolidation within the space industry, fueled by the increasing demand for advanced AI infrastructure and satellite communications. The consolidation comes at a time when the space sector is experiencing unprecedented growth, with companies racing to capitalize on emerging technologies. Although earnings from both companies have yet to be reported, the deal suggests a shift towards capital-efficient operations, crucial amid rising borrowing costs that challenge smaller firms. Technical analysis shows that Iridium has broken through key resistance levels, indicating strong momentum and institutional interest. Investors are optimistic that this consolidation could trigger further mergers and acquisitions in the space sector, potentially reshaping the industry landscape as AI technologies evolve. With Rocket Lab poised to expand its operational capabilities, the future looks promising. As demand for innovative space solutions grows, this merger may set the stage for Rocket Lab to become a leading player in the next wave of aerospace advancements. Industry experts suggest that companies may need to pivot quickly to demonstrate tangible returns on their AI investments to regain investor confidence in the coming months. Thank you for tuning in. Which story shocked you the most? Let us know in the comments, and don't forget to like and subscribe for more updates.